Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing what to expect in Nifty and Bank Nifty, the key levels for both the indices, and the sectors that are expected to outperform in trade today. First, we'll look at an update in the week gone by. Last week, if we see, has turned out to be a wonderful one for the benchmark index Nifty, which has surged above the psychological level of 23,000 mark and registered a fresh all-time high. Along with this rise, it has given a breakout of the horizontal trend line, which was formed by connecting the recent swing highs. On the weekly scale, if we see, it has formed a sizable bullish candle. As the index is trading at an all-time high, all the moving averages and momentum-based setup indices also are in the positive. The daily RSI has surged above the 60 mark for the first time after 26 trading sessions and is currently in a rising trajectory. Examining the market breadth, if we see the 20-day SMA, which is a key indicator used by traders to assess the short-term trends, shows significant improvement. Currently, 43 stocks out of Nifty 50 are trading above their 20-day SMA, a substantial increase from just 14 stocks nearly 2 weeks ago. Additionally, there has been an uptick in stocks reaching new 10-day highs as well, another important metric for short-term trend analysis. These developments clearly signal a notable strengthening of market sentiment in recent trading session, suggesting continued optimism in near term. However, ahead of the general election results, we advise against taking excessive leverage and emphasize the importance of maintaining strict stop loss orders. Avoid chasing prices in the coming trading sessions. Instead, we recommend focusing on large cap and high quality mid cap stocks during the current phase. Now coming to the levels for Nifty. Going ahead, the zone of 22,750, 22,700 will act as an important support for the index in the short term as per the rule of change of polarity. That is, the previous resistance once breached current acts as the support zone. So as long as the index is trading above this support zone, it is likely to test the levels of 23,150 followed by 23,350 in the short term. Now coming to Bank Nifty. Since the last couple of trading sessions, Bank Index, that is Bank Nifty, has formed a strong base near the lower trend line of the rising end channel and thereafter witnessed a sharp rebound. On Thursday, it has given a base breakout on the daily scale and resumed its northward journey. It has ended the week above 49,000 mark with a gain of over 1.5%. On the weekly scale, it has formed a sizable bullish candle carrying higher high and low as compared to prior week, which is a bullish sign. Along with this rise, it has surged above its 20 and 50-day EMA levels. Among the momentum indicators, the daily RSI has surged above 60 mark for the first time after 14 trading sessions and it is in the rising trajectory. Among the constituents of Bank Nifty, currently 75% stocks are trading above their 20-day SMA level, which is the highest since May 3rd. This clearly indicates internal strength of the banking space also has improved significantly in the last few trading sessions. Going ahead, the 20-day EMA zone, that is the levels of 48,200, 48,300, is likely to act as a strong support for the index. As long as the index is trading above 48,200, it is likely to continue its positive momentum and test the levels of 49,700 followed by 50,100 in the short term. Coming to India VIX, so for the fourth consecutive week, the volatility index India VIX has witnessed a sharp upside rally and touched the levels of 24.21 and thereafter witnessed a minor cool off ahead. So if you see, it has ended the week below 22 levels. Going ahead for the index, the zone of 19.219 will act as the immediate support, while on the upside, any sustainable move above the levels of 23 will lead to further upside towards 26 followed by 28 in the near term. Now coming to the broader indices. So during the last week, the broader market indices, that is Nifty Mid Cap 100 and Nifty Small Cap 100, have underperformed the frontline indices. The ratio chart of Nifty Mid Cap and Nifty Small Cap index is trading lower since the last 4 trading sessions. However, the technical structure of both these indices is still bullish and they are trading above their short-term and long-term moving averages. Also, the momentum indicators and oscillators are also suggesting bullish momentum. The Nifty Midcap 100 has marked a fresh all-time high of 52,731 on Friday and thereafter witnessed minor profit booking. Going ahead, the zone of 51,700 51,600 will act as the immediate support for the index, while on the upside any sustainable move above the levels of 52,800 will lead to an upside rally up to the levels of 53,500 followed by 54,100. Talking about Nifty Small Cap 100, since the last four trading sessions, it's oscillating in the zone of 17,040, 16,730 levels. It has formed a small body bearish candle with minor lower shadow. For the Nifty Small Cap Index, the zone of 17,000, 17,050 will act as a minor hurdle. Any sustainable move above the levels of 17,050 will lead to a horizontal trendline breakout on the daily scale. In that case, it is likely to test the levels of 17,400 followed by 17,600 in the short term. While on the downside, the zone of 16,750, 16,700 will act as a crucial support for the Nifty Small Cap Index. Now coming to the sectors to watch out in trade. So among the sectorial indices, we have Nifty Bank, Nifty Private Bank, Nifty Financial Services, which have witnessed a smart rebound in the past few trading sessions. The current chart structure of these indices indicate a strong upside in the next couple of sessions. Nifty CPSE, Nifty PSE, Nifty Auto and Nifty Metal is likely to continue their outperformance in the next week also, that is in the current week. However, we recommend maintaining a strict stop loss in these sectors as they are approaching the overbought zone. Apart from this, Nifty Oil and Gas is on the verge of giving a symmetrical triangle breakout on the weekly scale. Any sustainable move above the levels of 12,050, 12,100 zone will result in a triangle breakout. In that case, it is likely to witness a sharp upside rally towards the levels of 12,300 followed by 12,500 in the short term. That's an end of today's podcast. Thank you for regularly listening to our podcast. Thanks and have a great trading session.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.